Our next story is the biggest headline of today. China is now the richest country in the world. It has overtaken the United States. China's net worth is now $120 trillion, $30 trillion more than that of the United States, $120 trillion. China may be the richest country in the world right now, but it's not a tag that it will be able to hold on to for very long if things continue the way they are. Because wealth is leaving China, and some of it is heading towards India. Tonight we'll tell you how Xi Jinping's policy is bleeding China and it's proving to be advantage India. India's tech sector is getting more investment than Chinese companies. There's a clear shift in the direction of foreign money. But first, let me tell you what's happening in China. The rich are losing money and their companies are losing investors. None of this is exaggeration. There's data to support all of it. Take a look at this report from October. In the last 12 months, investors in Chinese markets have lost $1 trillion. Let that figure sink in. $1 trillion lost. These investors were forced to dump Chinese stocks. Why is that? 3 reasons. Number 1, the Communist Party cracked down on big tech in China. Number 2, Beijing's decision to go after American corporate giants. And number 3, the curbs on online education. These 3 decisions wiped out $1 trillion. Beijing labelled these moves as a revolution, but they poked a big hole in Chinese markets. The result was losses. And they did not stop at $1 trillion. China's biggest companies lost $3 trillion in all. $3 trillion. The sell-off destroyed their market value. There was a time when China celebrated its businesses and its entrepreneurs. Today, it is destroying them. If the markets are in turmoil, how can Chinese billionaires stay immune? Colin Huang ran one of the biggest e-commerce platforms in China. His wealth has reduced by a whopping $27 billion. Tencent's founder Pony Ma lost $10 billion after China's crackdowns. In all, China's tech tycoons lost $87 billion due to the state crackdown. Other sectors were also affected. Zhong Shanshan is China's richest man. He runs Nongfu Spring. It's a major bottled water company. Even he could not avoid the losses. Zhong's losses amounted to $18 billion. And all of these people have only one man to blame for this. Xi Jinping, the Chinese president. He embarked on a mission to reduce the gap between the rich and the poor. And his solution was to make the rich less rich. How would he do that? Through crackdowns and regulatory scrutiny. But it's not necessarily helping the poor. Xi Jinping's decisions have led to a chain reaction, more losses for Chinese businesses and more bad news for those who run them, because they are losing investors. Foreign investors no longer consider Chinese companies as safe bets. They're taking their money elsewhere. They're turning to Indian companies. A lot of them are. The shift began in July. Foreign investors began pouring money into Indian startups and companies. The result is this. India's tech sector is getting more investment than Chinese companies. Look at these numbers from September. For every dollar invested in Chinese tech, $1.5 were invested in India. Let me show you another chart now. On every metric, Indian tech sector is performing better than China. There is a 287% increase in the value of deals. What about the number of investment deals? Compared to last year, the number of deals struck in India has jumped by 62%. In China, they grew by 47%. Investors say a large chunk of the difference is coming to India. The Chinese may boast of being the richest today, but if Beijing does not stop its crackdowns, that money is not going to stay. Considering the trajectory that China is on today, it should brace for more losses. WION is now available in your country. Download the app now and get all the news on the move.